The gold is at all-time high. The Indian jewelry market is booming, and yet India's biggest jewelry stock has fallen 50% from its peak. So, what's going on with Kalyan Jewellers? Is this a buying opportunity of a decade, or is there a real problem hiding behind the shiny showroom? Today, we go deep. Business model, cash flow, debt, promoter pledging controversy, technicals, valuation, and at the end, you will get my honest review. Without wasting any time, we can quickly get into the video. Let's talk about the company background first. Kalyan Jewellers was started in 1993 in Kerala by T.S. Kalyan Raman. He is the first generation entrepreneur from Thrissur, Kerala. He started with one shop. Today, Kalyan has 315 showrooms across India and Middle East. It is listed on NSE and BSE in March 2021. The revenue is 28,000 crores on a trailing 12 months of basis. That puts it among top 3 organized jewelry retailer in India, right alongside Titan and Senco Golds. But here is the thing most people miss about this business. Kalyan is not a jewelry shop, it's a distribution mission. Let's talk about the business model. I mean, how exactly they make money. 70% of the revenue, it comes from plain gold jewelry. 20% of the revenue, it comes from studded jewelries like diamonds and gems. And the rest from the fast-growing online brand called Candere and their Middle East operations. Now, the gold is not where the profit comes from. Just think about it. When you buy a gold necklace, the shop buy a gold at market price and sell it to you at market price plus making charges. That making charges is the margin. That is roughly 10 to 15% of the jewelry price. That's the real business. And the studded jewelries like diamonds and gemstones, they carries even higher making charges, which is why Kalyan is pushing hard to grow that particular segment. Now, how do they expand without spending too much of capital? It's two words, which is called franchise model. Their My Kalyan sub-brand local entrepreneur opens smaller Kalyan branded outlets. This is particularly in tier 2 and tier 3 cities. From here, the Kalyan gets the revenue. The franchisees takes the risk. This is called smart capital and light expansion. On top of this, they have Candere. This is an online first jewelry brand which is growing fast and targeting young buyers who wants to shop from their mobile phones. And the result is the revenue has gone from 10,000 crores in financial year of 20 to 25,000 crores in financial year of 2025. This is 2.5x growth in last 5 years. Now, let's talk about the financial. So we have to get into the numbers because this is where it gets interesting. Let's talk about the revenue growth. The revenue growth is 32% compounded over 3 years. That is exceptional for any companies, let alone one in jewelry retail. Now, we have to talk about the profit growth. This is 47% compounded over 3 years. Even this is better than the revenue, which means the margin is improving. In Q3 financial year of 2026, which is last quarter, the net profit, it jumped to 90% year on year. Revenue is up to 42%. This is not a slow company. Now, let's talk about the cash flow. Because profit on paper is nothing if cash isn't coming in. The operating cash flow, it was positive for first straight 4 years. 1,322 crores in financial year of 2024 and 1,209 crores in financial year of 2025. And here's the number I love. The cash conversion cycle, which tells you how efficiently the company converts the inventory into the cash. It has fallen from 241 days in financial year of 2021 to just 129 days in financial year of 2025. That is massive improvement in operational efficiency. They are selling faster and collecting faster and paying the suppliers slowly. This is exactly what you want. But there is a concern. Operating margin is 6 to 8%. That is so thin because the gold is expensive. It inflates the revenue, but it doesn't inflate the profit. So the real story is, can they grow the studded jewelry mix? Because that's where the fatter margin lives. Now, it's time to talk about the debt. Total debt is 5,335 crores of September 2025. this sounds alarming. Let me explain why it is not scary as it looks. Most of this is gold metal loan. Jewelry companies don't always buy gold outright. They borrow gold from banks. They make jewelry, sell it, and then they will repay it. This is a standard industry practice. So the debt is mostly asset backed, and this is not a reckless borrowing. Debt to equity ratio is 1.0x something, and this is not an ideal, but I feel this is manageable given by the scale of business. When you look at the interest coverage, the company earns about its 3.5x of interest expense from its operating profit. This is comfortable enough, but it is not a cushion. As long as sales is growing, the debt is not a problem. If sales stalls, that's when it becomes risky. Now, we have to talk about the promoter controversy. This is the one where everyone is talking about. In Jan 2025, this particular stock, it got crashed literally 38% in just 13 trading days. Do you know why? There are two things happened at the same time. First one is, in social media, there was an allegation that the Kalyan promoters has bribed two fund managers at Motilal Oswal to buy the stock and push the price up. Number two, BSE Fillings has shown that the promoter Ramesh Kalyanram and Sitaram Kalyanram had pledged their large portion of their personal shares. The pledge went from 0 to 25% of the promoter total stakes. That's a significant number. On the bribery allegations, they called it is an absurd. They said there is no IT raids happened on their premises. Motilal Oswal also denied these allegations. On the pledge, the executive directors, they have explained that the share pledging is mainly used to raise the fund to buy out Warburg Pincus. That's a private equity firm where the Kalyan had a stake on that one. So the pledging has happened to increase the promoter holdings, not to raise the personal cash. And if you look at the shareholding data, promoter stake, it has actually gone up from 60.5% to 62.75%. That supports the management explanation. So no SEBI action has been taken till now. The business results after controversy, it is still outstanding. But here is my honest take. The pledging is the yellow flag, not a red flag. Why it is yellow flag? If the stock continue to fall and it hits the triggered price, lenders can force sell those pledged shares. That would push the price down even further. And this is a dangerous spiral. So this is something we need to watch closely. If the pledging goes above 30%, that's when I would get seriously concerned. Now let's talk about the technicals. So we have to get into the chart. And now let's look at the chart. That stock, it hits at all-time high, which is 795 rupees in Jan 2025. The stock, it is trading around 395 rupees. That's the 50% fall from its top. Now, technically, the picture is not good right now. When you look at the EMA of 50, the 50-day exponential moving average has crossed below the EMA of 200. That's called the death crossover. It's a bearish signal. The stock is trading below EMA of 50 and EMA of 200. That means the short-term trend and the long-term trend both are pointing down. There are few positives on chart. The RSI is on oversold zone, which means the selling pressure, which is exhausting, volume has been failing along with the price, which is actually a good sign. It exactly means the panic sellers are running out. I can see the strong support at 347. That is where 52-week low. The bottom line is the chart is broken, but it is starting to look like the base is forming. I would not call this is at the bottom yet, but the risk reward is getting better. Now, let's talk about the valuation. This Kalyan Jewellers is cheap right now at 378 rupees and the PE is 33.8. That sounds expensive for the thin margin retailers. For a company growing at 30%, that is reasonable. When you look at the PEG ratio, that will adjust the PE for growth. Is that around something 1.02 to 1.2? Anything below 1.5, that is considered as a fair value for the growth company. The current PEG ratio, which is 0.71. Now, let's compare this with the Titan. It is India's most premium jewelry stock. The Titan, it trades at 77 PE, but the Kalyan, it trades at 33 something around PE with a faster near-term growth, which is meaningfully cheaper. The price to book for the Kalyan Jewellers, which is 7.29. For a value investor, that is hard to swallow, but here is the honest truth. Great growth companies rarely looks cheap on the book values. If you wait for Kalyan for 3x, we have to wait for forever. The domestic mutual funds, the smart patient money, they have been buying. Their stake has gone from 11 to 15.23%. That is an significant accumulation. So my verdict on this particular stock: business is genuinely excellent. The revenue is growing at 32%. The profit is growing at 47%. Cash flow is improving. Operational efficiency is also improving. Strong brand in the sector, but the chart is broken. The promoter pledge is a risk. The margin compression from high gold price is a structural concern. So my verdict is, do not rush in and do not ignore it either. If you are a long-term investor, if you're holding for 3 to 5 years, start accumulating in small positions. Don't put everything at once. If the stock falls to 347, which is 52-week low, add more. And the hard stop loss is 330 rupees. If it breaks something with more volume, something more serious may be wrong. Target for next 12 months. If the business continues to this trajectory, it will hit nearly somewhere around 550 to 600. Now, this is my full analysis of Kalyan Jewellers. Please do drop a comment if you're buying or waiting or completely avoiding. I'm very happy to read all those comments. Please do subscribe my channel and do hit the like button for this video. I will be very happy. We'll see you on another good one. Thank you so much. Bye-bye.